Hello, Mike Swanson here. I run the website wallstreetwinner.com, and the odds are that you're watching this video because you got an email from me telling you that it's up on YouTube. Now, if you're not on my free email list, you need to get on it because that way you will get an email from me every single morning before the opening bell with the top stories I'm watching that I think are important that you need to know about and my own market commentary in a blog post. So if you're not on that email list, go below this video and click the link associated. You'll see it and join my free email list. Now, I'm recording this in a nice quiet time. The stock market is actually closed. And when the market's closed, it's easier to kind of just relax and look at the charts, and you got to focus and keep yourself aligned with the real trends that are important because they are what are moving the markets. And last week we saw some disruptions. We saw a day in which the Dow got hit very hard. In fact, it had two back-to-back very rough down days. We also saw the price of gold kind of flounder around, but mining stocks took a hit too on Thursday last week. But if we look at the charts, we can see what's really going on. And that's what I want to talk about with you right now. So what's going on with gold and the mining stocks and commodities, because they're all basically linked together. So to do this, I must share my screen so you can see my charts along with me. So here we are. This is a chart of gold with the close of Friday, and you can see gold took a hit in June. It went up to 1925 and then fell to 1750 and has since bounced back. And last week, I did a very important interview with Ike Iossif, who runs the website marketviews.tv. You can find that on my YouTube channel, and I'll link to it below this video too. But he went through his critical money flow indicators when it comes to the XAU mining stock index and also with the S&P 500. So if you look at that video, you'll see exactly what his indicators are showing. Very interesting information. But if we just look at this simple chart right here, we can see that, look, the action right now is very similar to what took place in March. The gold had been pulling back from really New Year's, made a low in March, and then bounced for a double bottom that completed at the end of that month and then charged up for a very nice rally. And right now, we're also going through a similar type of stabilization pattern for gold. Just as gold stabilized from those declines that began in New Year's in the month of March, we now appear to be stabilizing again. And that's good. That's probably what's going to continue through the rest of this month. And that's important to know every single day when you see gold up or down to understand, hey, this move I'm seeing today is happening in context with a stabilization process, much like what we saw last March. It's simply playing out again this July. And why do I feel like this is stabilization and not like a bounce that's going to lead to some big decline? Well, it's because of what's going on overall in the commodity market. You see, the price of gold is part of the commodity complex. And yes, while gold did a dip in June when it went through 1850, commodities in general had already been dipping. And let me show you what exactly I'm talking about. This is GCC, a broad-based commodity index. It made a critical bottom in the spring of 2020 and then had a tremendous rally. But then that rally momentum began to run out of steam in May, just as all these headline CPI numbers began to be talked about in the financial media. The actual momentum for commodities themselves, ran out of steam. And many commodities made a double top from their May peak to another June peak. And that double top is what led to the drop in gold. Silver also took a hit too. But what you need to understand is this is just a pause. This is not a mega top for commodities. It's a mere pause. It's a consolidation for the overall commodity complex. And there's no reason to think commodities are like heading in some sort of collapse. They're taking a breather. And many of them have likely actually already seen their price lows. So what's going on in gold and silver right now is part of an overall consolidation phase for commodities in general. Very important to understand, and that's why this is stabilization and not the start of some epic top like what you saw, let's say, in 2012 for the price of gold. That means when you're in a bull sector, the way to trade is to buy on dips. That's when you take investment positions. I know very few small traders or investors that are very active in the market nowadays are interested in investing. They're mostly trying to get rich quick. I talked about this in the last video. This is why stocks such as AMC are among the top 10 most widely owned stocks on Robinhood. These are stocks that people are not taking positions in as investments, but stocks they're buying in the hopes that they will go up like crypto did in the first couple of weeks of this year, or like they saw GameStop. And unfortunately, I think they're sadly mistaken when it comes to AMC. And I talked about that in the last video that I did. Go to my YouTube channel if you want to see these previous videos. But anyway, you can see GCC is now in a sideways trend. It's not in some sort of collapse. And that's why gold itself is in some sort of stabilization process, much like we saw in March. But there's another reason to even more important reason to understand that this is stabilization for gold. And that is the US dollar index itself. You see, historically, what gold trades, the most consistent trading relationship gold has, statistically proven by math, is it trades against the US dollar index, meaning when the US dollar goes up, gold tends to go down, and when the US dollar goes down, gold tends to go up. Gold is a hedge against the US dollar in inflationary forces. So what's happening with the US dollar is that the US dollar became oversold in June. The RSI indicator for the US dollar touched 30 and it got oversold. That coincided with gold making a short-term top. Well, now the US dollar index has rallied since June and is now overbought in terms of its RSI indicator. It touched 70 twice. Now, that doesn't necessarily mean the US dollar index is going to go straight down. What it does mean is it's now extremely overbought and is likely in the process of making a top. That the upside from here is very limited for the US dollar index. It's very unlikely that it's going to be able to go through that March high, maybe not even get above 25 on the CTF that tracks it, UUP. So this is also why there's now a floor being made in gold. I think that's the best way to understand what's going on in gold in the month of July. A floor is being created that will eventually lead to another rally. It's stabilization, just as US dollar index is now overbought and going through some sort of topping phase. The price of gold is in some sort of bottoming phase. So that's how to understand what's going on in the gold market now, and how to think about what's happening as the rest of this month carries out. So I want to leave this video with you and these thoughts with you to go forward for the next couple of weeks. If you are coming to this YouTube, this is the first time you ever see me on YouTube, what you need to do is then click the subscribe button and then click the bell. And that way YouTube will notify you as soon as I put the next video up, because there's many interesting other things going on in the markets that I want to show you and talk with you about as the markets unfold in front of us here. So good talking with you. It's nice to have the markets closed and be able to talk with you when we can look at the charts in peace together. And let's do that again. Click subscribe, click the bell, and you'll see my next video update.